Hello, and thank you so much for clicking this video. Today, I would like to show you an example on how by making a medium-sized investment of $5,000 per year into a participating whole life insurance policy over 10 years will provide you over $160,000 at age 65 if you're a male who is age 35, and over $175,000 if you're a female who is also age 35. Also, at the end, a really cool tip on how you can withdraw this money from the plan up to 4 times as much of how much you put into it.
So I'm on my illustration software for Equitable Life of Canada, a company that's been around since 1920. They are a mutually owned insurance company, which means that the policyholders are the owners and not the shareholders. So what I'm going to do is I'm going to illustrate how this type of investment brings different benefits than what you would get with an RSP and a TFSA. So as you can see, we have a male, age 35, as the owner. The insured would be the same male, age 35, as a non-smoker. The rates would be different, obviously, if you are also a non-smoker. You'll notice that the annual mode, the payment mode is annual, but you can also have this as monthly. Next, you'll notice that the premium type will either be a life pay or a 20 pay, which is simply enough just saying that the policy can be paid for your entire life, or we're going to have this policy fully funded and fully paid off within 20 years. So what I'm going to do now is illustrate exactly the $5,000 annual amount going into the plan. So I'm going to choose $5,000 using the maximum extra deposit option. And what that does is it tells the illustration software how much $5,000 in insurance, $5,000 will buy me in insurance. So it calculates this amount for me. Next, I want to select how long I want to pay into this plan for. So as I stated in the example, we're going to specify that we want to stop paying for this plan in 10 years. The dividends that these plans provide, I'm going to leave it as paid up additions for this particular plan. And now I will run the report. Okay, so you'll notice that now that we have designed for the male age 35. First, I want to cover the base plan coverage. You'll notice that we have the base amount of insurance of $115,844, and the price for that is $2,962.32. But we mentioned that we're putting in $5,000. So the difference, the remaining amount, which is $2,037.68, will be the accelerated deposit option, or how I like to explain it as the extra deposit option, which will give us a grand total of our $5,000 a year premium. Now the plan does a very, very good job on explaining all the components of the plan and what each feature means. And you would obviously get a copy of this not only on your presentation, but within your application process as well. Okay, so now we are at the illustration portion of the plan, and I'm just going to break down certain features of the plan to you. So you notice that the plan is actually broken up into guaranteed values and current dividend scale non-guaranteed values. What this simply means is that the insurance company is guaranteeing you that no matter if they make any money or not, that there will be cash value growth within the plan, and that your death benefit will never fall below of what you initially purchased. The non-guaranteed values are what the dividends that they pay out to you into the plan, how it accumulates into your cash policy, and how it also grows your death benefit over time. So you'll notice that the required annual premium is the $2,962 each year. We will jump over to the first 10 years of payment. So here is our $5,000 a year annual premium payment. The annual dividends growing each year tax-free within your contract. These are the annual dividends paid out each year, and also how they accumulate each year inside your contract tax-free. You'll also notice that the dividend option being paid up additions is also purchasing you more life insurance each year that goes by as well. So we paid $5,000 each year for a total of $50,000 into the plan, and the remaining amount of time into the plan will be paid by the dividends. And you'll notice this here for the next 10 years. At the end of the 20 years, the plan requires no more payments into the plan. The plan is fully funded. We have over $4,000 of annual dividends coming into the plan for a total accumulation of almost $100,000 into the plan, with $230,000 of fully paid up life insurance. At age 65, you'll notice that the total cash value is at $169,578, and the total life insurance is at $308,884. So now I'm going to show you what it looks like for a female. So you'll notice that we have the same setup for female age 35, female age 35, same $5,000 a year, paying it into it for 10 years. You'll notice that the life insurance amount is actually at $121,981. And now we'll run the same report. Female age 35 and female age 35. So the base plan amount, once again, over $121,000. Required premium is only $2,999.50. So the remaining amount will be extra deposits into the plan, and that'll be $2,000.49. Okay, so here we are, $5,000 going into the plan for the first 10 years. The remaining 10 years will be paid by the dividends. And the plan is fully funded after the 20th year. No more premiums are required. And this female will have over $100,000 into the plan, with over $260,000 of fully paid up life insurance, which can continue to grow for the rest of her life. If we fast forward to age 65, she now has over $170,000 of cash value inside the plan, with over $350,000 of fully paid up life insurance. Now that you've seen how the plan works, I want to show you a cool tip on how to withdraw over $10,000 per year for 20 years and still have over $100,000 left inside the plan, with over $120,000 of life insurance left. So we're just going to go back to the male scenario. And what I'm going to do is illustrate a withdrawal. So I'm going to choose withdrawals. I'm going to choose from age 65 till 85. And I'm going to tell the system what is the maximum amount I can take out each year from the plan from age 65 to 85 and still have the plan in place. So I'll quickly go down to the illustration part at age 65, and you'll notice that if I choose to retire at age 65, I'm able to take out over $10,000 for each year for the next 20 years. So what I really like about this is the total investment was $50,000. And this person was able to withdraw over $200,000 for themselves. That's 4 times as much, and still not have to worry about leaving their family picking up the pieces because the life insurance is still there. So you'll notice that they took it out. There's still over $100,000 of cash value within the plan, with $120,000 of fully paid up life insurance still in place. So if you want to see and create a personal plan like this for yourself with your age and budget, then I have some exciting news for you. We have fully trained and licensed digital advisors where we walk you through a presentation explaining the basics of life insurance, complete a detailed insurance analysis, and create a personal plan for you all in real time, all virtually from the most comfortable place you can think of, your home or a coffee shop or even in your car. After your meeting, you'll receive a PDF version of your needs analysis, an email quote summary of your plan, and a secured link to a recording of your personal information session, just like the video you're watching right now. So just go to dfinsuranceSolutions.com, scroll down to the bottom of the page, and schedule your personal information session today.